I think there are two things. Firstly, banks have considered the internet to be a channel, and actually I think were quite wary of how to use it, and they considered it as a price channel. So that's why they naturally aligned with the aggregators and all these types of guys, and actually, they pay a phenomenal amount of money for click-through and all the other bits and pieces. So the reality is that I think they saw it as a price channel, and they could only basically compete on price, which is why you see e-saver rates, relative to what you get in branch as where they happen to be. In reality, it's quite hot money. It kind of whizzes around all over the place. And I think actually the idea of thinking about the internet as a convenience tool is only now sort of gaining some traction. And actually it does come from actually being a user yourself rather than actually trying to second guess why other people are using it. So I think you will probably see banks consider the internet as a convenience channel, and the experience and the products that are offered and the simplicity of access and all those kind of soft things will become much more important than price. And I think that will happen over a relatively short period of time. You then get to the interesting challenge of balancing risk, because as Brian talked about, cybercrime is a massive influence on the market, and actually a massive cost to us as an industry in terms of money that it's not just on its security in its broadest sense, but it's particularly relevant on the internet. So on the one hand, you're encouraged to make faster payments, which means the money, once you actually press the button, it's gone, and we can't get it back any quicker than you can get it back, or at all. Whereas at least in the past, it sort of sat somewhere for a little while, and there's a remote chance that if you press the wrong button, we would be able to get it back. So we're encouraged through regulation to have faster payments and to have higher limits for faster payments, so actually larger sums of money can kind of move around the place. That by definition increases your fraud risk. So how do you put protections in to make sure that actually these are legitimate transactions by people who genuinely want the money to go from A to B? It's a bit clumsy and clunky at the moment, as I think you've just found out, and the reality is we need to find a way to make it less clunky, and it's something that I think we're certainly occupying a lot of my time, and I'm sure it must be occupying the times of the retail heads at other banks as well. But it's a balance.
The leaders of retail banks that I talk to are talking about we need speed, we need transparency, we don't need elapsed time, we need processes that are immediate so the customer gets that instant gratification. Banks are in catch-up mode, and they are as worried as you. They are worried. The boardroom conversation about the future of Apple Bank, Facebook Bank, and a plethora of organisations coming to take away customers. The problem banks have is they're 300 years old. They're not 10 years old, or in the case of Facebook, 5 years old, 80 years old, or whatever it is. So they have 300 years of legacy. They have branches and call centres and internet channels that are all separate with their own identification models, and complexity in processes and duplication, which unfortunately the new world of digital actually exposes quite obviously to customers, and you're seeing that. So there is, you are seeing, and you will have seen over the last 2 or 3 months, new payment capabilities. Mobile is the big thing. Every bank is working hard to get new mobile capability apps out to the market. My worry is that there's a lot of spend and work to be done to get banks simplified so they can provide the kind of service that you want.
I think that people like Apple and these guys want the payments traffic. Yeah. PayPal want the payments traffic. They certainly don't want the fraud risk. So actually, if they can deposit the fraud risk on the banking system, that's perfectly cool. And actually, that's the risk. None of these guys will go into being fully fledged banks, because there's a nasty bit at the end of it, which is called the fraud risk, which they don't want. So actually, the challenge for banks is not to be left with the fraud risk, and actually to be taken out of the payment channel altogether. Because actually, I don't fear an Apple bank, but I fear Apple as a payments transmitter.
Okay, quick.
So I agree with you, but you only look to the insurance market, because the danger here is banks become like insurers, where Money Supermarket and others have disintermediated them, and I think that's the danger for banks. They get the cost and the complexity and the risk, but not the customer.
Okay, quick snappy question to end this.